So the momentum isn't going to be with Cathie's names right now. She's like, innovation's never been cheaper. And I go, no, innovation's actually just priced correctly now. See, I think that's the difference between me and Cathie. She seems to think that innovation has no valuation metric that's high enough. Like she'll buy Coinbase at the high, she'll buy Robinhood at the high. She doesn't seem to care that the stock might trade much lower and she could have bought it at $12 instead of $35. Okay. Why? Because she doesn't care about valuations. It's clear that she doesn't wake up in the morning and say, you know what, what's the valuation of Coinbase when I bought it? We bought Coinbase too. We just waited and bought it way cheaper. We bought 35% cheaper than ARK. Why? Because we just waited. Okay. So right now, the next phase of the market isn't in high PE, high growth technology names. It's just not. It's not going to be. Rates are going higher. It's a great, strong economy. Look at UPS today. UPS, boring company. They ship crap. Numbers going off the charts. Dividend up 40%. Best numbers I've seen for UPS in years. The economy is great. Industrials is what's doing well. The John Deeres are doing well. People are out. They're the MGM. We added to our MGM stick. I went to Vegas. Couldn't believe how busy it was. Couldn't believe how much money people were betting. It was like $50 tables everywhere. Couldn't find a $25 table. And I'm like, this is prime pandemic. It's packed. Okay. The going out trade is what's happening now. MGM, Vegas is where it's at. So we took a big position in MGM. We have a big position in Blackstone, bricks and mortar stuff, real estate. We have big position in real estate. I love Lennar down here at 7 times earnings, the demand for homes. So mortgages went up. That doesn't change. There's no homes for sale. Everybody's trying to buy a house. There's no homes for sale. So if I'm building homes, logistics centers, Prologis, so like we just invest in different areas than she does. So we have innovation. Technology is about 27% of my fund. Innovation, fintech, AI, that's part of what we do. But real estate's 15% of my fund too. Home Depot. People are at Home Depot fixing up their houses. And so I think that her fund and stocks are going to have a little bit of time here before they start coming back, because that's just not where the money's going right now. The economy is growing. It's a reopening trade, and industrials are doing good. You got 7%, GDP. You got inflation. You got oil as your top performing sector. You got to look at what's happening. So I don't think the high PE growth stocks are where it's at in this part of the market right now. So I own a certain amount of them, but what we're buying are low PE stocks that pay dividends, like Pfizer. I bought a little Pfizer. 15 PE with earnings going up with a 3% dividend, that, and rising, that's attractive. Abbott Labs, I think a lot. Moderna got cheap, so you got companies trading at 4 times earnings, Fulgent Genetics and Moderna. Try to explain those PEs. Is coronavirus gone? No, it's worse than ever. So there's opportunity in innovation if you find the low PE stuff like Moderna. That's innovation. But if you look at Zoom and it's trading at 40 times earnings, it's properly valued now. That's basically what it is. Is there upside? Sure. Is it going to happen on the short term? No. But if you're going to be holding Cathie's portfolio for a little bit before you make back your money, what we do as a multi-thematic fund and as a long 30-year investor is we rotate to where the puck's going, and the puck's going towards, sort of solid industrial companies right now, and that's where it's going. And that's a good thing actually for America. And it's a good thing for the Dow. So you have the Dow outperforming the NASDAQ by a substantial amount, right? And we're more levered to the NASDAQ like Cathie. So if you can see the difference in our funds, because if you take my fund and Cathie's fund, and we both have the same top holding as Tesla, ARK Innovation and GK, and then we have the same amount of stocks. We have 45 or so other stocks. Okay. And we're both investing for growth. And if you take when my fund started in July to today, and you look at the performance, I think we've beat Cathie's fund by over 30%. That's insane. Like she's diverged from every index and every investor by such a large amount. The fact that she hasn't adjusted to this is really insanity in my mind. And so I love that she rides her ARK down as much as she rode the ARK up. But as an investor, you got to sort of move on from her portfolio because it sucks. It just sucks. It's not the portfolio that's going to do well right now. So you might get a bounce back in some of these names, but none of them are cheap. And Robinhood sucks, and Teladoc sucks, and Zoom. It's like some of them aren't so bad. Maybe Teladoc, or I don't know, but the valuations make no sense. It's going to be a tough time. So do I love growth stocks? Yes, but we look at it from growth at the right price. Growth at the right price. Where can I get growth that's greater than the PE rate? And you can find that in many stocks today. And those are the stocks you want to buy. Like a Petco. It's a growing company. It trades at a PE that's below its growth rate. And if Petco executes, it's less than $20 a share. It's worth 30 in our mind. You got a 50% increase if they just execute this year. God willing. So I prefer. We must understand where the tides shift in the markets as they do over the years. And so every period has different themes. And with COVID, technology shined. It just shined. We all adopted tons of technology because of COVID. Okay. But COVID is over now. And now we're looking at enormous healthcare costs and needs. We're looking at a reopening, getting our society back to work. We're seeing like enormous amounts of money being spent on fun stuff, leisure, travel, domestic. Okay. We're seeing no lack of demand for anything, theme parks, whatever. And so we really got this growing economy trade going. And that's really what we're looking at now. What's growing economy trade? So if Netflix gets real cheap, I'll buy that because it's Netflix. But I'm not, a good 65% of my portfolio is not levered to tech and climate. Look at it that way. So we're much more levered to the consumer, and the consumer is doing real well right now.